So again, an escalation by the tariffs, a slight stepping back by China this morning. Morgan Stanley warned of meaningful risks of an escalation and that we could be facing a global recession if the U.S. ratchets to 25% on all Chinese imports. Are you thinking global recession, or is that too dramatic a statement?
I think right now we're prone to headlines, and I think we're actually way beyond the point of global recession. I think the most meaningful takeaway here is, judging by the Jackson Hole comments by Mr. Powell, I think we've come to a place where now central banks can't do it much more without any fiscal stimulus at this stage, and knowing that Mr. Trump and the Chinese are running into a problem where negotiation no longer seems to be having an effect, and actually now it's a game of brinksmanship. Who's going to blink first? So I think going into this next quarter, we're going to see the groundwork being laid out for a blame game. Now, we've seen it already in terms of the President Trump blaming the Fed, challenging who's a bigger enemy, Chairman Xi or Fed Powell. So I think we're seeing Mr. Trump willing to go all the way into December even, pre-election phase. And I think at that point in time, it might be too late and we'll be entering into a recessionary phase. Remember, Europe already is in a recessionary phase. They're expected to act in the next 2-3 weeks. And I think we're already there, more or less. The data is lagging, but we're beginning to see embers that we're actually slowing down significantly.
Saed, I guess no surprise then that the 2s-10s curve has inverted again. Are you surprised then, given everything that you've just said, that the 10-year Treasury yield hasn't yet retested that 2016 record low?
I think in terms of the 30-year, it's more of a panic button, and yeah, I think it's more of a panic button trade right now, given where central banks are expected to move. Now, we're expecting the Fed to be very vocal in Jackson Hole, and the members of the Fed have been very clear that they will be more reactive to data as opposed to actually preemptively acting on Mr. Trump's actions. So there is now a stalemate whether Mr. Trump ratchets up the dialogue even further against China and then forces the Fed actually to act again in September. We could see the 10-year dip again and 30-year dip again, and we would see further pressure on the back end of the curve. It's now all contingent on trade relations with China. That much is clear. The Fed's happy with where the economy is, but they're buying insurance effectively.